Welcome to Roots and Ruminants, your podcast for creative and innovative use of farm, pasture, and rangeland. We're going back to the basics of raising and grazing livestock, growing your own forage, and practical land use.
Well, welcome everybody to another installment of Roots and Ruminants. Justin and I are here with a guest this morning or this afternoon. Spring edition, we kind of get a little bit sparse with everybody being busy, but I know there's a lot of folks that are busy hauling cattle, hauling livestock in the tractor, probably getting into forage harvest here in the next week or two in some areas. So we want to make sure we have plenty of good content. And we have been talking about the market, the cattle market, probably for the last 6 months on and off. It seems like it enters into every single discussion we have and how that's affecting all of our individual plans for what we're doing on our operations. And so we're really, really fortunate to have a guest here today, Rich Blair. So if you remember back, if you're a longtime listener, Rich's son, Britton, was, I think, episode 3 or 4 or 5, one of the two, one of the original top 10, going back about three and a half years ago now. But we're excited to have Rich on. So if you're a little bit familiar from Britton's podcast or with Blair Brothers Angus, they've got a operation where they sell seed stock across the country, sell several hundred bulls every year. But in addition to that, Rich is got a commodities business. So we're excited to have Rich join us today. Rich, I gave a little brief introduction. Would you give us just a little bit more detail, your background and operation, your business?
Oh, it's like, how much do you want there, Jared?
Well,
it's a lot of years, you know.
Up to an hour and a half before
up to
half. So
well, I was a graduate of South Dakota State University, grew up in Sturgis, South Dakota. And after I got out of college with an animal science degree, and I was on one of Dan G's judging teams, and that was a great experience. And anyway, I was going to start coming back to the ranch, and at that time I was kind of looking to go do something else for a little bit, and I applied for a job at PCA in Nebraska, and I applied for a job at Califax in Denver, Colorado. Well, PCA in Nebraska told me that they wanted to hire Nebraska kids, and that was the greatest decision of my life. Was that PCA in the early 80s would not have been a great place, a very fun place to go to work. I don't know whether you guys know the farm crisis of the 80s, but it was a tough one.
What was PCA? I don't even know what that was.
Production Credit Association and Farm Credit.
Okay,
who
basically
is now
gotcha.
Have changed that, but they were the short-term lender, and Farm Credit was the long-term lender. And it was a tough place to work in the mid '80s. But anyway, so I got a job at Califax, and it was just a great place to go to learn. I think I was the right locale for them to hire somebody, and they really wanted kids that were on a judging team that could talk and could defend a position. And at that time they were located in Denver, and we did everything out of Denver, and it was a great spot. So I started there in 1979. And you talked a little bit about cattle cycles, and that was the end of the 1979 run-up in prices and cattle cycle. And I started then after the highs had already been made and the downs were coming, and so that was kind of interesting. And it seemed like a lot of times what people started at in that business at Califax, if you started on an up market, well, you were always kind of a bull the rest of the time, and if you started on a down market, you're always kind of a bear, and that's kind of the way it worked.
No different than when you start farming too, I think.
Probably.
And how you look at things, and how short-term memory is not very good. So
well,
yeah.
There was a guy reminded me today. He said, he traded a fat cow contract with me. I mean, this was 30 years ago, and he said that he and his brother got in on it, and they, they lost money on it. And he said, and I told him at that time that that's the best thing that ever happened to you, because if you'd have made money the first time, then you think you're smart and you don't have any respect for the market, and then you end up in trouble, you know. So it goes like that. So I worked at, make long story short, I worked at Califax, got started there. I always said my claim to fame was I trained Randy Block, because at that time, the older analysts would train the young analysts, and Randy, I maybe had 1% of the training of Randy Block, because he's come a long way since then. But it was a great organization. I learned a lot. I was feeder cattle analyst from the central part of the state, from Oklahoma, Kansas, Dakotas, Missouri, Iowa, and just got to talk to a lot of people, and it was a cheap education. And then I came back. Well, I had a commodity office, and I've always had a commodity office since the early 80s, and it's always been kind of a small office. My passion's a lot more to the ranch and being in the cattle business. And the commodities deal is, I don't have a ton of customers, and haven't ever really tried to develop a huge customer base. I trade a lot for myself and for the ranch. And they always say, well, if you're going to be a good broker, you don't trade for yourself. And if I'm going to be sitting in here every day, I'm going to trade for myself. That's just the way I'm made. So I've been through a lot of ups and downs in the cattle market, followed it on a daily basis since 1979, which seems like it's been, a short time ago, but a long time.
Mm-hmm. So over the years, so this would be, fourth or fifth cattle cycle, right, Rich, that you've been up and down? And...
Yeah, you didn't have a very big one, and you had the big one in 79. You didn't have that much in the 80s. Kind of the mid-90s, you hit a short one, like 96, 97, and then you really blew up in 2003.
Yeah.
Before Mad Cow, and then, so then 14, and then now. I mean, the cycle's got pretty flat there for a while, and now they've gotten really exciting,
Really exciting, yeah.
So I don't know, when you count, it's about 1, 2, 5, at least 5.
Yeah. And there's kind of a couple different theories out there that we were probably due for some of the, I don't know, kind of uptick in prices and stuff, kind of running into COVID, and then everything got weird for a few years, and that kind of delayed, you know what I mean? That should have been some stronger prices, should have been some cues for expansion a couple of years ago that kind of got lost in the shuffle between lack of packing capacity and stuff. Is that kind of true? Or we're in a long cycle right now from 14, 15 to now, aren't we? 11, 12 years, or is that normal?
I think 10 years is pretty normal. I think that's, closer to it. This one seems like it's been kind of a long one. And actually, I think the 14, 15 cycle, between like 2003, well, I guess that was 11 years. So I don't know, Jared, they're about the same. I think it's right on track. It has, I'd have bet you a lot of money in 14, 15 that we would never get cow numbers below where we got in those years. And we did that in this one. And that's probably the biggest surprise of all in this cattle cycle, I think, is that we took numbers below where we were then.
Yeah.
Can we like dissect a cattle cycle in terms of what it means for a productive cow, like her age, her life in production, when we start to sell off and when we start to build again, and what that looks like over that 10-year period?
Justin, I'm kind of a big idea guy. I'm not really a nitpick guy. So you're asking a lot for me to nitpick
Gotcha.
and dissect what's going on there. I'm just not a detail person. Never have been. Don't want to be. I
But
said that I don't know, to the guy one time something about well, I never was much of a detail guy, and he says, yeah, he says you got to watch the big things. The big things can really kick your butt, you know. But
so
The big deal is we don't have enough cows right now. At some
well,
point, we'll have
you
more.
know, this the basic premise of the cycle is you have unprofitability and people get out of the business and you drop cow numbers and it gets tight enough to where and then those numbers keep dropping, and then it feeds on itself because you're slaughtering more cattle than what you're producing, and you're trying to get rid of cow numbers, and so your slaughter gets bigger, and then all of a sudden, it's like a guy said, well, the dog hits the end of the chain sooner or later, and you can't liquidate any more cows, and then the first thing that happens is you drop cow slaughter, and that's what we've done here because you basically run out in numbers. The second thing that happens is you start retaining heifers when the profitability comes, and then that's another add. The effect becomes additive because then you really drop feeder cattle supplies, and that's just where we're just barely starting to retain heifers at this point in time. And you've not seen the drop in the placements of heifers at this point. I think that comes more this fall.
Okay.
It was like a guy, that was a pretty good example. He said, you're getting feeder cattle backed up in the countries when you drive through the southeast and there's a cow sucking a calf and she's having another one. And I mean, you just, boy, it can take a long time, to clean up numbers.
Yeah.
And then it can take a long time to build those numbers.
Yeah. Yeah, there's so much flexibility in the system by holding cattle over, keeping them longer, backgrounding at, almost no gain, less than a pound a day on some of these situations, right?
Yeah.
On grass or on the cow, whatever, or just kick the cows and the calves to stalks, you know what I mean? So the calves are just out grazing corn stalks with the cows type thing. I mean, you can do a lot of situations where you're just holding them.
And we did that with COVID in the feed yards.
Yeah.
I mean, that's where we learned to put days on cattle like we're doing today was through COVID, because you couldn't move them and you had to end up feeding them. And then some people would say, well, geez, we could have put a lot more days on these cattle than what we've been putting on them. And then now that's what we're doing. So,
yeah. So the cycle stops when production basically starts to come back up, right? And that's usually the peak, right? The cattle cycle is kind of the peak of the market to the peak of the market, or is it the inventory, technically, or it doesn't really matter. They kind of go hand in hand. But, from a market standpoint, you say the high to the high.
I don't know. I would almost say, the cattle cycles say peak in numbers to peak in numbers, or bottom to bottom. The price can come at any time.
That's
because
true.
because the cattle market is so anticipatory of a market that they'll build in the demand or supplies before they happen.
Yeah. Well, so I think one of the things that seems different now that we would have been taught in college, and we always talked about, which was protein substitution for beef, right? And that was always what was going to keep us in check. There was always chicken, there was always pork. It's always cheaper, right? Never been a situation where it wasn't cheaper. It's just how much cheaper, and that always kind of felt like it kept beef in check. And the stuff I've seen is that relationship seems to be potentially broken, or irrelevant anymore. I mean, beef prices from a ratio standpoint have gone so much higher than pork and poultry, and it really hasn't seemed to curb demand.
Yeah, and I don't know if I've ever been a big believer in that one product offsets the other. I mean, we have seen in times where hog prices were higher than cattle prices.
Yeah.
And we've seen now where cattle prices are way higher than hog prices. And I mean, sometimes I don't think there's a very good relationship between those two.
Yeah.
I don't have necessarily the hard data to prove it, but I kind of feel that what topped us in 2014 and 15 was the grinding market. And where you can really get substitution in beef and pork and chicken is in sausages and hot dogs and all that stuff. I mean, there was a guy, Black Hills Packing Company, they had a packing plant in Rapid City, and they made a little Rushmore Smokies, they called it, and it was a really good little breakfast sausage. And there's a guy told me one time that the guy that made those had 200 recipes for Rushmore Smokies, depending on cost of ingredients.
Yeah.
And I think that's where you really get the substitution. Is all those kind of sausage and products, and that's a big chunk of meat, you know.
Yeah. Yeah. Especially grinding.
But the beef industry is incredible. I mean, the demand for the beef is it. I see some of this stuff and says, well, it's the best in 40 years. And I think, well, man, it wasn't very good 40 years ago. I think it's way better than that. I mean, demand has just been incredible. And COVID showed you that. I mean, all my life I'd always been told, well, you can't sell meat that high. You can't sell beef that high, da, da, da. And COVID come along and you could sell meat that high. I mean, that deal got crazy.
Yeah.
And the good thing about that, we never really lowered the retail price of beef after COVID, and people get mad about that. But the good thing about that is then you don't have to re-educate the consumers if you keep it there and give everybody margin. And then, man, now, you know, we've put all this money on fed cattle, and you've raised the retail price of beef 50 cents to $1, but it's not that big in comparison to a lot of other things.
Oh, back
You there?
up. Lost you for a second. I think we got
Yeah,
you.
we're good now.
Yeah, but you know, I had a guy, a local restaurant guy, tell me, I don't know, it was back last fall. He said, my cheapest thing is the center of the plate. He said, ribeye steaks really haven't gone up that much. He says, all the costs are the butter and the vegetables and the labor and everything around it. He said, center of the plate's not moved that much.
Huh.
And,
I mean,
and
it's always
that's not true today.
Yeah. Yeah. It's always expensive. It goes up 30-40%. It looks really expensive, but it's not. Many ingredients have more than doubled, right? Well, you think
Yeah,
about that. Like,
I thought I just saw a deal where they're just talking. I mean, the price of beef's up 7%. I mean,
yeah. Well, you talk about like maybe there's not that much elasticity to these things, or they're fairly inelastic anyway. You know, when eggs went to $8, $6, $8, everybody just bought $6, $8 eggs, you know, and complained about it, but they still bought them.
well, but you had, I mean, the price goes up because you're rationing supplies, and I mean, somebody didn't buy it, and I think, you know, that's maybe it's what the futures market's job or to do right here. The market's job is to ration supplies of beef because we're not going to have as much. And what, you know, and it kind of anticipates that coming, and I think that's what we're doing here. So
Yeah. So you mentioned those two things that are those big indicators, which is percent of heifers as a percentage of cattle on feed, or heifers as a percentage of cattle on feed, and cow slaughter. Now, cow slaughter's finally slowed up, you know, and it's a question of, are we, you know, liquidating less, or we just ran out of them, right? We liquidated so many that the cow herd's, you know, that much smaller, and we don't have them there. So that slowed up some from the fever pitch, but it was so strong for so many years that, you know, there was a pretty high bar, you know, on cow slaughter, right?
Yes, I mean we were killing a large percentage of the beef cow herd,
Yeah.
and dairy herd also at that time. I mean we were killing a large percentage of them, and so you just you can't keep that pace up
Right.
for too long. I mean that's what I said.
Yeah.
Dog hits the end of the chain, and you can't drop it anymore, and and but it's like now. Price is still drawing out slaughter cows. I mean, people like the price of calves and they like fed cow prices and whatever, but what they really got tickled about was the price of butcher cows and bulls.
Mm-hmm.
And price draws them out, and you still get more numbers than you should right now.
Yeah.
It's we've dropped cow slaughter quite a bit. But we're probably at more like a normal percentage of the herd. We sure haven't been holding any cows. And I think you can see that looking around. I mean, especially where it's been a little bit dry, boy, if those cows are worth, I don't know, $1,500 to $2,000 or $2,000, you take them to town, or I guess it's $2,000 to $2,500.
Yeah.
And that's the deal with bulls. I mean, people used to keep a 5, 6-year-old bull, and now if he's up weighing over 2,000 pounds, well, man, you haul him to town as quick as you can before he gets hurt.
Yeah. Because it's worth $4,000, $4,500, something.
Yeah,
Or
that's
five.
what I heard. Some of these guys gonna have to pay capital gains on their bull purchases. Bringing more than what they paid for them.
Yeah. So
I'm sure everybody will report that too, won't they?
Yeah, right. I doubt they will. Percentage of heifers in the feed yard, though. That's the one that is gotten a little better, but we were also like at all-time lows here the last couple of years, right? As far as, all-time highs. Highs as far as heifer
like
retention.
44, 45%, and we should be below 40 or down in the 30s.
Yeah. And so has it moved down low enough where has it moved low enough yet to signal expansion? It just isn't as high as it was.
Right. Yeah. I think we're kind of at a normal level. I think we're right around 40, and so we're not expansion and not liquidation.
Yeah.
Where we're at right now. But it's there was a lot of country that was dry up until 2 months ago.
Yeah.
And I mean, western South Dakota was nip and tuck a week, 10 days ago.
Yeah.
And I mean, now there's been a lot of rain go through here, and things look pretty good. I mean, things for the season look like it's not going to be a wipeout. Yeah. And a month ago, you didn't know it was going to green up.
Yeah.
And so, how many people still have heifers left? And that's the old deal about the price draws them out and everything else. But really, you don't see the big swings in the cattle cycle in this country. I mean, in the high plains and cow numbers up here are typically pretty stable. I'm talking Dakotas, Nebraska, Wyoming, Montana, Iowa. They can go up and down. In Missouri, they can really go up and down. And Texas and Kansas, and really the Southeast is the places that you really see numbers vary. But I think this country, I mean the Northern Plains, I think we've looked. I think we're down on cow numbers relatively as much as I've ever seen in any of the previous cattle cycles. Drought and price of hay and some of the, and this was a pretty severe financial cow cycle, not so much because prices got so cheap, but because expenses got so high.
Yeah.
You know, I mean, you're not even,
Yeah, feed was expensive over this
yeah,
last,
well, feed
not the
was
last 2 years,
expensive,
but
interest, you know,
sure.
insurance and taxes and labor and gasoline and
Yeah.
health insurance and I mean, just everything.
Yeah, it took more of a price rise to actually make people feel like they were actually literally be profitable than it should have, right? In this cycle
Yeah,
with expenses going up.
yeah.
Yeah.
So if we look at like from a farm or ranch business management perspective, and obviously prices are higher, so we're selling cull cows, we're selling cull bulls, and we're not retaining heifer calves. We're selling those heifer calves. If you're to plan out for the next year, 2, 3 years, what do we continue on that path, or do we say, all right, now on year 3 though, this is probably where we retain it? If or we start building numbers back up, knowing that in another 7 years past then, we can expect that next cycle to creep up again? Or how do you plan that out, I guess?
Oh, you know, that's so dependent on the age you are and where you want to be. I mean, it's. I had a guy tell me the other day, and he's probably in his early 70s, and he's saying, "Man, I got my cow numbers up pretty good," and he says, I need to sell them here before this cycle tops because I don't know if I can live long enough to see the next cycle high." You
Yeah.
know, and I'm thinking, oh, geez, that's kind of scary.
Yeah.
Justin, that is the question. I mean, how long can it be? And that was like, I had a guy tell me after 15, he said, you know, we all knew the calf prices were high and it was gonna come back down and it was pretty good, but it was gonna come back down. And he said, but I really thought it would last another year.
Yeah.
And that was exactly what everybody thought at that time, but really thought it was going to last another year. And that's been one of the biggest detriments to increase in cow numbers on this is because the people that bought cows in the cycle in 14, 15, they're still paying off.
Yeah. They
Kind of
got burned so bad.
so bad, and they're not going to do that again. And I I don't know. I'll tell you where the expansion's occurring right now is the stocker operators. And I still like in Kansas, Oklahoma, Texas, that country, you know, they're usually margin operators, you know, buy feeder cattle and sell them as feeders or fats, and there's those guys are breeding some heifers, and but but they're also breeding them to keep them as cows if that's what they need to do. I don't think it's a speculative thing.
Yeah.
I'm talking around your question, Justin, because
No, you're answering it.
I
That's
don't
I
know
think
what
that's
the answer. I think we've got some time, and what's exciting about this? I mean, I said after 14, 15 that the next cattle cycle is going to be a demand market. I don't think it's going to be a supply market, and it ended up, yeah, it was partially a supply market, but it's also demand, and um, we've got we've got a really good product. Um, Consumers are buying it at a price level that works for us. I mean, you take retail beef prices at $8, that that that's kind of $2 fats. I mean,
Mm-hmm.
those things work. It's the packer that's really getting squeezed here, and that's that's the fear. That's the problem here is if you start shutting down packing plants, and then when numbers increase, then you don't have any kill capacity, and that hurt us through COVID, and that kind of hurt us liquidating cows here was you didn't have enough kill capacity.
Yeah. So in 14, 15, I don't remember what the numbers were exactly. If you're listening, you can look it up. But I want to say like percentage of cattle on feed that was heifers got down to like the low 20s or some ridiculously low number, right? It was so far below, 5-year averages, and it was like 2.5, 3 million heifers, retained in 1 year, one big run. It and it felt like it, right? So that was back when we were doing just a ton of AI work everywhere, and like you just doubled, and you got to other reps breeding heifers and stuff, and man, you just like increased 50 to 100% in 1 year, and guys that had never bred a heifer, that farmer feeders, that kind of stuff, they just lay in, let's do 700-800 of them on a one-time deal, um,
It,
they
it
don't have
was. It was really a quick expansion.
yeah, and so that's what kind of gave it that final push to get to that super big high, is because it created this really big shortage. We're starting to get short, and then you create this huge shortage with really rapid
Well,
expansion, and then really
and you
fast.
had a bad drought in Texas and Oklahoma, and you took 1.5 million cows out of that country in a
Yeah,
year
yeah,
towards the end of that, and that really tightened numbers.
yeah,
I mean, that was a devastating drought in Texas and Oklahoma in
yeah,
12. That drought was in 12, and
yeah,
and you could come back pretty close. That was the thing on the last one. You had interest rates at 4% or whatever, and that's what's really different this go around. Interest rates are a lot higher, and just the cost of buying a load of cattle is kind of a little bit prohibitive.
yeah.
I,
So
I
it
don't
seems
know.
to me like there's this kind of that created a big run up and then a big cliff, right? So it
Yeah,
artificially escalated the market 10-15% or whatever it was, and there was a cliff because that was happening. But for there to be a cliff this time, and there can be a cliff for other reasons, black swan events, whatever it is, there it's not that, right? It's not the fact that there's 2.5 million heifers or 2 million heifers over normal getting retained for heifers this year. That is not, the data does not support that's happening.
no.
At most, we
Data's a little
might,
bit behind, but no. I mean, I
yeah,
don't like the northern plains, Dakotas, Montana, Wyoming. I don't think there's much expansion at all. But they did liquidate maybe 1 million head up here, and I don't think you've brought those back. But
yeah,
and then labor is such a problem.
yeah. I mean, we haven't had a year for a while where the guys that speculatively are bred heifers on the fall sales. I'm not talking about the January and on. There's a lot more interest, labor, feed, and everything that goes into those. Those have been good, but we haven't had a fall yet where the guys that have bred a bunch of heifers are super happy with the premium they got in the bred ones over the opens. I mean, the opens, the bred ones are just a couple $100, $200, $300 higher than a big nice group of opens. You know,
Yeah, I
hasn't
yeah.
been that much premium yet.
Look, it's hard. Yeah, it's hard, but it's interesting. I mean, they'd always kind of pay you to turn a bred heifer into a 3-year-old cow. They'd pay you pretty well to calve her out and bring her back as a bred 3. But now it's like the 4s and 5-year-old cows are bringing a premium to the 3-year-olds, and that tells me that people do not want any problems. I mean, they want to buy cows that are no problems. So
Yeah,
that means they don't have any labor, um, you know, and I I don't know. It's hard to see where you got the labor to calve a bunch of heifers. And I mean,
yeah,
I think that slows you down. That slows you down some. There's not a lot of confidence to go out and breed a bunch of heifers.
yeah.
I
Yeah, because if you need to sell them, you not only need the market to be right, but you need to be enough people out there that actually want to do it. You can make
Yeah,
sense on paper, but they actually have to pay it. You know,
yeah.
it's
But
hard.
I do see some expansion, some heifers getting bred in, and some bred heifers being bought through Arkansas, Missouri, Texas, Oklahoma, Kansas, maybe. But
Hmm.
there, I think, I don't think there's the big speculators in there buying the 2,000 head of heifers and figuring they're going to resell them. I think they're maybe figuring they're going to change their stocker operation to a cow calf deal a little bit or whatever. But, and from what I hear out of the southeast, um, you know, there's so many of those people down there that have to fertilize the grass to get anything, and fertilizer is pretty prohibitive on a range situation like that.
Yeah, yeah, sure. Hmm. Anything else that you like in the last whatever? What do you figure of this bull run has been? Hard 18 months, you know, basically not quite.
It has been, I know it has been up since the 1st of October. Every week, feeder cattle have been higher since the 1st of October. I mean, at the sale barn.
Yeah,
Hmm.
Just
yeah,
every week, the market's been higher, and you thought, oh gosh, I should have sold them last week. And then, well, why would you worry about that? It's going to be higher this week, you know?
yeah. We
And
had we had a couple odds and ends things, you know, like a pink eye when we sold, and a real feminine looking steer we thought was a heifer because it was tagged wrong. You know what I mean? That we pulled out here before we, you know, saw it a week after we sold steers and stuff. And so we got these two like odd steers hanging around, and I think they might bring, not counting feed costs, $500 to $600 a head more as singles than they did if we would have sold them with the
When you
group.
sold your group.
You know what I mean? Like,
yeah.
and that's with a discount for them being two, you know, versus a
How
pound.
much they were above what the group brought.
Yeah,
That's
it's
crazy.
it's noticeable.
That's
It's a
crazy.
mistake that was pretty profitable
Yeah.
on a per head basis. Yeah.
Yeah.
What have you seen? So I don't know if it was the last podcast, Jared and I were just visiting about land prices and the cost of production for a cow, and then relating that back to where our cropland is valued and our pasture land is valued. So looking back historically, when we see these highs, do we see this push on rangeland, pasture land start to increase? And does it ever, can we ever get close enough to cropland? Is there ever a way that we even get close to cropland values?
To where people take cornfields and plant them back to grass, you mean?
That,
Yeah.
or we, pasture in Huron, South Dakota is now valued as high as tillable acres in Huron.
Oh, I think we came pretty close to it last time.
Yeah.
Um, there's just, oh man, there's a lot of stuff in that equation, Justin.
Yeah, there is.
Um, there is a good demand for pasture land out here. I can tell you that. I mean, they had a pretty big auction sale here a month ago in Belfouche, and there were a lot of buyers there. I mean, there's always a lot of people at land auction, but there were a lot of buyers there, and not as many lookers as you typically see. It was just, there were some serious people serious about trying to buy a piece. It's like one time I was complaining about the price of land or something, and my brother says, "Well, I don't know what you're talking about because land has always been higher than what you could make it cash flow at or make it work at." And I think my response to him was, "Well, it used to be twice as much as what it was worth, and now it costs 4 times what it was worth."
Yeah.
So the land deal, there is so much money out there that is not tied to agriculture that want to be that want a chunk of ground. It's just unbelievable. I mean, and that's going to keep
Yeah.
land prices higher than they should be. And, but it's,
Yeah.
you know,
Yeah, that spooked me a little bit when when the tariff talks were first coming out back in early April here, and then you had this really weird thing where the bonds and the stocks weren't following each other. The money was
yeah,
in the stock market, but it was also leaving bonds at the same time. And then you're going, okay, where's it go? Then where's it going? And because there's only so many places to put money, and so properties become a logical place, right? Because they
well,
might
man,
hold cash for a little bit, but it's got to get somewhere. Because you've got a couple $1 billion in cash as an organization, you're FDIC insured for 250,000 in your deposits. Like, you need to get it somewhere.
but land's always been a good
Yeah,
investment. I mean, you look at most of the ranchers and farmers where they made their money over the years, it's in their land investment. It's not
yeah,
in the farming or the cattle. And, and it's almost like the old saying about, well, they're not making any more of it. It's kind of almost like it's becoming more true all the time.
yeah,
And, but you've got, we think land's, and it's especially like Western South Dakota, not so much where you guys are, but to some extent. I mean, we think land's high, but then to somebody from central Iowa, we're pretty cheap, and for somebody from western Montana or western Wyoming or can come out here and this is or Texas, this is the cheapest ground in the United States starting here for pasture land, and we think it's really high, but
yeah.
it's not to them. So
No.
I don't I don't know whether we can, as long as there's an ethanol industry, Justin, I don't know how we'll plant corn acres back to grass, but who knows?
And a strongly the big beautiful bill has a tremendous amount of really strong reinforcing tax policy and subsidies for biofuels. I mean, it's just chock full of stuff that goes into that sector. And this administration has been really clear about that from the get go, that they were gonna unabashedly support farmers through biofuels policy, right? Domestic biofuels.
Well, and I didn't really read the article, but I mean, electrical power is just, there's such a demand for it, and it's so huge. And I was out at Washington State, Oregon, along the Columbia River, and there's these huge warehouses, and they all have their own power station, and it's a power grid. And I mean, I don't know, they're 5 acres apiece, and there was maybe 7 of them, and somebody was saying, well, Amazon's going to build 200 of those.
Yeah.
And they're cloud storage. That's what they're, and it takes 5 or 6 people to run that building, but they consume an incredible amount of power. And then they talk about how much power that AI is gonna take. And I mean, it's something that I don't understand, but we have, and that's maybe not ethanol, but there's just going to be a huge demand for energy, I think.
I've even heard conversations between ethanol companies and data centers, right? Because a lot of these are going in rural areas now, for sure. North Dakota's got several coming on. I know there's been talks about some in South Dakota, just getting them out in the country and getting them close to relatively cheaper power states and power availability.
Yeah.
But there's so much heat coming off of these, and it's low heat, right? It's not super high heat. It's not gonna, run smelting furnaces for ironworks and that kind of stuff. But it's about the right kind of heat coming off these data centers to pump over to defray a lot of natural gas that it would take to heat up your fermentation vats. You know what I mean? To heat the mash up to get it to going. So I've heard some conversations there that, well, we should really team up because the heat coming off the data centers could be pumped over and used to heat the mash up instead of burn natural gas. but we just haven't built a new ethanol plant in a long time. But their step in this tax bill that probably will spur the next generation of building, biofuel facilities.
Well, we haven't built a lot of power generation either, have we?
No.
I mean, we windmills and some of that, but I don't know how efficient they can be.
Yeah. But yeah, no, I think that there's some artificial stuff keeping the crop prices, keeping the crop demand high enough where it's going to be difficult to.
But it is. I mean, that's kind of the interesting thing in this cattle cycle is, cost of gains are so much below fed cattle prices. And
yeah,
I mean, cost of gains are 85, 90 cents in the feed yard, and fed cattle prices are 220 to 230. And it's a no-brainer to make them bigger. And the packer wants you to make them bigger because he's trying to sell pounds, but he's buying head, and he's, he wants them bigger because he wants to sell more pounds of meat. And, we've been able to continue to increase beef production with smaller numbers, which is pretty amazing just by what the weights have done. But it was interesting. Last week in the latest data, carcass weights were down 8 pounds. And I think the only explanation for that is, it's a little bit seasonal, but I think the explanation is we're pulling cattle ahead in the feed yard. I mean, the cash selling guys, they're pulling them. They like this 220 to 225 to 228. I mean,
time to cash in.
Time to cash in. Yep.
So I was having this conversation with somebody the other day. It was because it was one of those days when corn was making a big move. I don't remember if it was down or up a little bit, but I think it was down pretty big. And it's like, remember the days when you could scroll down on your charts, right? Because that would, for me anyway, all the sites I go to start with grains. All the ag sites start with grains and go down to feeder calves. And you kind of had a decent idea of maybe where feeder calves were going to be based on what corn was doing, Yeah. It mattered.
Yeah.
But, in those days, if corn was up 10, 15, you kind of see, that was going to hurt feeder calves just a little bit because feeder calves moved and corn was all over the place. Now, there's no correlation. You don't even think about that.
Well, it doesn't matter. I mean,
it's too far.
Corn moves 10 cents, it doesn't matter.
Yeah.
Today, heck, if it moves 50 cents, it doesn't hardly matter.
Yeah.
I mean, cost of gains are 19 times the price of corn, so maybe they move up a dime. I mean, if corn goes up 50 cents, cost of gains go up a dime, doesn't matter. Yeah. And that was just like buying calves last fall. It didn't matter what price you gave for them. I mean, or you could give $10 or $15 a hundred more for them if they weighed 20 pounds less. Because 20 pounds at $3 was $60, and 10 cents on a 5-weight calf is $50. So it made more of a difference if he weighed 20 pounds more than what you thought than if he cost $10 too much, Which I've never seen anything like that.
That is awesome. Yeah. That's the first time I've heard that explained right about why it was happening like that.
Why? Oh, really?
Because it was the cost of gain was so cheap.
Yeah. He was selling them by the head. You don't even need to
you were buying them by the head.
You just run them through and sell them by the head.
Yeah.
A little bit.
Yeah. I mean, and it's kind of what you've been doing more than anything, is selling them by the head. And that's the deal with the fed cattle thing right here. To some extent, the market's screaming at you to sell them, because the cash price is 220 to 230, and the June board's at 210, and the August board's at 206. It's telling you, the market's going down, you better sell them. Well, I kind of figured out the other day, if you can put another 150 pounds on them, you can take $10, $15 a hundred less in 30 days. It doesn't you get more dollars by taking a lower market and putting another 150 pounds on them. But that kind of contradicts what I was saying about the cash guys are kind of pulling them ahead, but formula guys are probably putting more weight, but it's going both ways. But you got more people pulling them ahead than hanging on to them right here to some extent.
They might just be sick of their margin account too.
Yeah.
Absolutely. That's true, Justin. I mean, I'd heard that some guys selling some feeder cattle just because they were sick of paying margin and had the hedges and let's sell the cattle and get out of the deal, you know.
Yeah.
That it makes perfect sense. It's true. It's happening. It makes sense.
Yeah, when the interest on your hedge account, the interest on your margin account becomes a noticeable figure in your daily profitability. You know what I mean? When it becomes a couple
Yeah.
it starts to matter.
Yeah.
More than the price of corn, you know?
Yeah. Yeah.
More than the daily moves on corn. So what does the outside interest look like? I mean, the outside interest trade commodities when they're moving because that's the only thing they can make money on. They don't make, you know what I mean? It's not like outside money goes into a stock. They can at least hold their money and hope it moves up, but they have something there. The outside money doesn't get involved in a commodity unless it's going to move because that's the only thing they can make money on. Otherwise, there's no point in playing in the commodities. So how is the stagnation, right, kind of in grains? Does that move money over to the excitement into the cattle part of it, or is outside money scared of what's going on?
Oh, I don't know. I like that theory on that. You know, the commodities got sold. The commodity funds got sold as a hedge against inflation, which they really aren't. But I mean, you had guys that had stocks that were out pushing. Oh, geez, you got to get the commodity market for a hedge against inflation. But I think what you got to realize there is that they sell the commodity funds by they. I mean, people selling exchange traded funds and whatever, you know, money, big money deals. And here's a way to diversify. Let's diversify the portfolio and we'll get into an exchange traded cattle fund or we'll get into market basket of commodities. And in reality, I think it's such a small percent of their investment that it really doesn't matter.
Yeah.
I mean, so let's put 5% of this billions of dollars in the commodity market and it doesn't matter to them, but it's a huge deal to us.
The commodity markets is a big deal.
Yeah. Yeah. But you know, the interesting thing, what the funds have done in the cattle market, I mean, in the 80s, you had as many cattle on feed as what you got now. I mean, you'd always average, say, 10 to 12 million head of cattle on feed. Mm-hmm. So, you know, 10 million cattle and 30 cattle per contract, you know, that's like 300,000 cattle futures. And you can hedge all the cattle on feed at one time in the United States. Mm-hmm. So in the 80s, total open interest was around 100,000 head or 100,000 contracts.
Yeah.
So all you were hedging was 3 million cattle. Well, you didn't have anybody take the long side of the market to where everybody that wanted to hedge could hedge. And so that's a downward bias on the futures market. Right there. Mm-hmm. So now you bring the funds into it. You've got the Goldman funds that, you know, they're selling an index. So they sell an index of commodity futures, and maybe it's cattle and corn and whatever. And in order to protect that index, then they go and buy individual contracts of cattle and corn and oats and wheat and whatever, and then make that into an index so it offsets itself. They're just making a market. Well, they're doing, I don't know, 50 to 75,000 contracts there, let's say. Well, and then you got the money managers, and they can blow up to 125,000 contracts. So open interest right now is pushing 400,000 contracts. Well, that's 12 million cattle. I mean, 30 cattle per contract. You can literally hedge every hoof that's on feed today can be hedged. You got buyers for it. And it's a huge, I mean, it changes the whole bias of the cattle market.
Yeah.
Yeah.
Well, that's I have no idea what the answer to this is. Maybe it's a silly question, but how much of the major packing plants, how much are they price protecting the cattle they're buying 3, 4, 5 months out on the futures market? Are they actually buying futures to price protect for forward meat sales, or not? Because if they're not, then who else would be, right? Who would be on the other side of it to sell?
There's always a breakdown of commitments of traders, and yeah, the commercials are basically short because it's mostly all cattle feeders, but there's a percentage of that commercials are long. And I think the packers, I really don't know the answer to how much the packers do out ahead. I would doubt they do an awful lot of pricing 5 months out ahead.
Yeah.
But there's talk that Walmart wants to price it one time a year.
Yeah.
They're the elephant in the room, and maybe that's where you're going to go to. And there's so much formula pricing, and nobody really knows all the details of all, or I certainly don't know all the details of that. I think the packers at times will, I think when they see value in the futures market, they'll buy it. And when it gets kind of out of hand, I don't know if they'll sell it so much, but they'll sure get out of their longs.
Yeah. And you think there's other, downstream meat traders and stuff like that, or brokers, that are moving boxes and things like that would engage too in the live cattle pricing. So what I'm trying to say is I get your point is because if there's, a whole lot of people, large, not large, disaggregated, feeders or people that have investment in cattle on feed, because there's a lot of these big feed yards, which are just a coagulation of a lot of modest-sized investors that have cattle on feed at those yards, right? I mean, they might have 60, 80,000 head of cattle on feed, but they might have dozens or even 100 or more people that have invested in those cattle there. So they're small, and they've got to protect that risk. Would there be, if it wasn't for the outside funds, would there be, again, there wouldn't be enough people on the backside of it actually buying those contracts that people are wanting to sell for price protection.
Yeah, I think it would take some of those investors out of the cattle feeding business if they couldn't feel like they could price protect them.
Yeah.
Now,
what about LRP? Does the access to LRP diminish the supply needed for that transaction on the futures markets because they're doing LRP instead of futures for price protection? Does it skew it the other way, where you've got?
Well, it takes hedgers. It takes hedgers out of the market.
Yeah.
Because instead of hedging, they can buy the LRP. And the way I understand it, the insurance companies can't lay off the LRP risk on the futures market.
Right.
They've got to take that. They've got to take that risk themselves. So
is that bullish in the way that your scenario in the 80s was bearish, is saying, hey, there's not enough open interest, has the LRP created a bullishness almost? Because you've got,
I would kind of tell you the people that are buying LRP insurance never really trade the futures market anyway.
Totally agree. I would agree with that. I think it's a new.
I'm not saying that's a bad thing. I'm just saying it's the way it is.
Yes.
So I don't, I learned a long time ago that if somebody wanted to buy options to protect the downside, I am a fool to talk them out of it. I mean, it's just like buying fire insurance on your house. I mean, you buy options and you pay a premium and you get a deductible and, you keeps you out of catastrophe. I mean, it's good business to buy LRP or to buy options. Because you never know what's going to happen. And it just protects a disaster. So, I mean, I'm a great proponent of LRP. I do think the one thing that it makes sense to me, and you may know this, Jared, but at some point we're going to have a disaster and people are going to look to the government about, well, where's my payment at for this disaster? And the government's going to say, hey, we gave you LRP insurance. You should have been taking advantage of that. We're not paying you for this deal.
Maybe. They don't do that for the crop farmers. They do both. You got crop insurance, let's do another one too.
Okay.
But maybe.
Maybe I'm just being a pessimist or something.
Yeah. Well, I think it's, yeah. I remember the lamb LRP debacle though too, right? And that was, you think about that. I mean, that could have. You remember that when they tried?
What was it? Something
I
like paying
don't.
out, the prices went too much higher or something like that. What was that?
Well, they didn't have there's not tied in specifications, and so you could at times you could lock in on LRP. You could lock in a price higher. You could lock in a price after your premium that was higher than fed lamb prices had ever been, right? Like it ever been in history. Just the formula, the way it was working. And so you could buy 160 pound, and there wasn't tight enough specifications on the sale weights and stuff. So you could buy 160 pound lambs, turn them into feeders, and feed them 210 pounds because you physically owned them. And you could get a hot price higher than you could ever receive on a contract or ever would have received live price. And so there was this weird incentive. That was like in 12, 13 when the fat lamb price got to 210, 215. So you could lock in 220 on, and then the specs were not tight enough. And so it absolutely obliterated what was supposed to be a price protection tool and a risk management tool, absolutely incentivized huge people, a large part of the market to feed for the LRP and not for the market.
Oh, huh.
But you had to feed them. You had to sell them in those windows. And so that's when the lamb price went from 220 down to 65 cents, right, Justin? 70 cents?
Yeah, I do kind of remember this now. Yeah, I just crushed it because there's so
yeah,
many
prices
big
went
lambs,
in
big
6 months.
lambs.
Prices went to a third of their previous high, and it really was not 100% LRP, but that probably was like gasoline on the fire of what was going to happen in the cycle.
It incentivized people to way overfeed the lambs.
Yeah.
It wasn't a market incentive. It was a
Yeah.
artificial incentive.
Yeah. And I think it was because of the speculation of what they were doing. So anyway, I don't know why I brought that up. It's just interesting. I kind of thought, and that was 10 years ago, right? More than 10 years ago. And they never even tried to revive the program. It was such a disaster. So they're lucky they got this one pretty right as far as a risk management tool so far. But I always wonder if there's something glitchy about the way they do things and the way they do something, you know what I mean, or price or whatever. If there's ever a time where it distorts the market, right? And I know a lot of people are trying to figure out, is it distorting the market in some way or another? And, my understanding as well is the underwriters, they can't offset that risk onto the futures to do that, but there's speculation about whether it's happening.
Yeah, and I don't know. I'm not that familiar with it either. I know people, it goes to the cash price and not the futures price, I think. And I mean, like right now on the Fed Cal end of it, I mean, your basis is extremely positive. And so people don't think they get much protection because it's going off the cash price.
Right.
Yeah. it's kind of whatever.
Yeah. Well, I know we're kind of getting close to time here, Rich. Any topics that you're expecting us to get to that we didn't get to?
Oh, I don't know. I think one interesting thing is just how the industry's changed. Um, from the 90s and 2000s, everybody wanted to raise 650-pound calves and put them on feed and, kill them in April. And you'd even have some new crop calves in March at times, in April and May and June. I mean, that's the way it's been for a lot of years. And then with labor constraints and whatever we talked about age, well, I couldn't figure out last fall why it was dry out here and there were no calves showing up at the sale barn. And I mean, it was in September and there were no calves and it was super dry, and we didn't really start the calf run until the 10th of October, which was really late. And I finally asked one of the sale barn guys, I said, what the heck's going on? He said, well, everybody's backed their calving dates off so much that, the cows are in good shape and they kind of want to put a little more weight on. But I mean, we've gone from wanting 6.5 weight, 7 weight calves and pushing them in the feedlot to everybody's way more happy to calve in May and grow those calves. Well, it's changed the seasonality of the fed market, and it's definitely changed the price spreads between states. I mean, Nebraska is getting to where it's pretty normal to be $10 premium to Texas and Kansas through May and June. And the first time it happens, you think, well, geez, that can never happen again. And then it happens twice. And then by the third time, I'm thinking, how stupid am I trucking feeder cow from South Dakota to Kansas to have them fed and bypassing Nebraska when Nebraska's fat market is 150 to 175 bucks a head higher.
Yeah.
And it's just, I mean, I think it's for real. I think it's the seasonality of the calf feds. And you still, Texas and Kansas are going to get some feeder cattle from the southeast. And then, there's a lot of guys there want to calve in December. Well, then they're still got new crop calves like in June, but boy, this country is, you've kind of almost spread out your fed cattle supplies, because some of them will be ready in August and some in July and some in September, October, December, and some of them drag out to
February, March. Yeah. Just getting put on hold. Yeah, I remember that. So like early 2000s, I remember there was late 90s. That was the big push, and it was like, yep, get them on the April, calve early, whatever. Finish them at 13, 14 months. Big premium for that. The creep. I mean, I think about the creep feed industry. I think creep feeding was 3 or 4 times more common back then than it is now. I mean, every there had a creep feed truck going out because you just had to put the weight on there. You talk to a lot of guys that creep feed now. It's about fly control, you know what I mean? It's about, it's about health. It's about maybe getting them started just right before, you start weaning, but it's not really about weight gain. It's more of a health management thing.
Yeah.
The guys that are still doing it, starting way later. But yeah,
it's usually, people talk about the new June cattle seasonal,
Yeah.
And now you used to have highs in April, and now it's almost like you have lows in April, and June has become a high. And I mean, I don't know. I remember a guy telling me 40 years ago there'd be a law against having one fat in July. Well, shoot, now July's not that bad a time period. It's the dynamics always change. The market always changes. I mean, you think you get one system figured out, and I guarantee you, I mean, that's maybe the thing I've seen over the years is it changes. Mm-hmm. I mean, the structures of the market and the dynamics can change.
Yeah.
And if you can see that early and take advantage of it, it can be very profitable. And that's the thing. I don't know, Justin, we were talking about cattle cycles, and I mean, people need to learn that there's a cattle cycle. And I mean, you could see this one. You could see 14 coming, but you could really see this one coming, I think. I mean, we were liquidating cattle, and demand was good, and people, and every time at that point in the cycle, people decide they're gonna go to running stockers and sell their cows and run stockers, and they were doing that a year ago, and it's just, I mean, to me, it's kind of like, come on, this is no time to be running stockers and getting rid of your cows, because it's coming, and you just got to learn to build inventory, when the prices
When it's
are
hard.
cheap. And my biggest problem, Britton calls me an accumulator, that I like to accumulate cows, and my biggest problem is getting rid of them on time. And that's probably the other thing I learned at Cattle Facts was you've got to sell cattle on the way up. You can't, once the market peaks and it's turned down, you can't run fast enough to catch a buyer. I mean, you know what I'm saying? You got to sell them too cheap on the way up, because you can never catch it on the way down. So, I don't know, when is the time to sell cows? Well, probably in the next 2 years, but I don't know if it's today or if it's 2 years.
Yeah.
Well, and the great thing is that the prices are good enough to sell cows today too.
Oh, I'd love the thing I always think about. There's a commodity office in Texas, and the guy tell me, and some old order buyer walks in and says, well, what's the price for your cattle today? And whatever it was, he says, well, at least they're not making you sell them cheap. And I always think about that as perspective, well, if I'm selling something today, are they making me sell it cheap? Or is this really a good price, and don't be stupid,
Yeah.
And in my lifetime, I have bought August feeder cattle under $50, and I have sold August feeders on top of 305. So I mean, it's pretty big move.
Yeah.
And probably the other thing, what's incredible is you look back at what February cattle did on Mad Cow, it was about a $20 sell-off.
Yeah.
We have had two $20 sell-offs and one $10 sell-off since the first of the year.
Yeah. Crazy.
Volatility
That is great stat.
Volatility is not going away.
And the contracts are the same size as they've always been.
Yeah, that's what everybody says. Oh, percentage-wise, it wasn't big. Well, no. A $20 move in feeders is still $10,000, the same as it was then,
Yeah.
But you just got to be careful to not get overly committed in that kind of volatility. No matter what it is, don't ever get yourself in a situation where they're making you sell them cheap.
Mm-hmm.
Is the point to that,
Mm-hmm. Yeah. No, that's great advice. Great insight, Rich. We very much appreciate it. So thanks for the time. Well, before we sign off here, Rich, we probably should say I know we mentioned this right at the beginning of the podcast, but your operation has a large selection of bulls for sale every year. Probably still have some, all done private treaty, so you don't get the fancy sale reports in the backs of the magazine like everybody else. But tell us a little bit about your seed stock operation and what you have available and how you provide those to people, what you have for an offering, and what that looks like.
Well, we have a large selection of bulls that are suitable for heifers in case you want to expand your cow herd at this point in time by breeding some heifers. So, and that's a little bit by design too, that I said you should be able to see this coming and you needed, bulls suitable for heifers. But we'll market 450, 500 bulls a year by private treaty. And we just, most all the bulls are out of AI sires in our 5, 8, 10 generations of AI. And it's a real low pressure system, and I kind of try to tell people everything's negotiable. I mean, I don't, I don't take offense to anything. I maybe say, no, I don't want to do that. But I'm not mad because you offered me way under the market. But it's kind of like everything, we've got bulls to move, and if somebody takes the time to come and look at bulls, I'll try to sell them something. So
yeah. Well, I've been out a few times, obviously, and brought some people out that have become customers, and it's different because you're not trying to get it all done in one day, right? You'll sell bulls for months and months, for people. But the biggest thing is I found people that really like to try to buy sire groups, you know what I mean? Get half brothers and buy okay, I'm going to buy 5, 6 bulls or 15 bulls or whatever it is, but I want half brothers. Like, you can kind of do that because if you ever try to do that at an auction, like, you'll dip into a sire group and then all of a sudden they go crazy high, and so then you back out, and then pretty soon you end up with the end of the sale and you got 3 bulls out of 3 different sires, and you tried to buy brothers, so.
And it's kind of nice, somebody that needs 10 bulls. I mean, most of what those guys tell me, I don't need your best ones and I don't want your worst ones, just give me your cut out of the middle and give me a price that I can work with, and that's what I try to do. It was kind of fun the other day. I need to tell you this story. We had a customer in Harding County that had sold their calves on the video, and I tried to buy them on the video last July and I missed them. And he ended up, they went to a producer in Kansas that I know, and he bought them because they were Blair Brothers sired calves. And he called me and said, well, he was going to sell them in Dodge City last Wednesday, and 8.5 weight steers. And I think, wow, that kind of fits the program. I don't own anything like that right here. And we'll put them on feed, and they'll come out in December, which is a pretty good time of year for high quality cattle to come out on a grid. And so we bought them in Dodge City on Wednesday. Made Corbett Walls feeder flash for sale of the day.
Oh, really?
I'm not extremely proud of, but
you were the guy
cool.
that made the most feeder calves that day and had to be talked about.
Yeah. But I mean, it's kind of fun to go buy your genetics out of Dodge City, Kansas, and I mean, they were too high, but I think they'll work. I know what they'll do.
Sure.
And
at that point, you didn't have any freight on them. They're right where they needed to be.
Right. Yeah, exactly. I didn't have to pay the freight to get them to Kansas, and kind of feed them in, I don't know, right around Dodge City, and so it's a great deal. But it's kind of fun.
Do a lot of buyback programs too, and then one last thing, you got a pretty popular bull right now in the bull arsenal. So tell me a little bit about Wallace.
It's a bull I bought out of Gardner sale in May, and he was kind of lot, 31 or something down in the sale, but he had some extremely good numbers, and I kind of thought, well, geez, that's a bull I'd use if I saw him in a semen catalog someplace, and I kind of some other circumstances, and so I just bought him. And I got calls at that time. What are you going to do with him? You going to turn him out in your cows? And it's like, no, I'm not going to turn him out in my cow. And so we sent him stud, and then the power of social media, that was what I wanted to say something about too, is incredible these days. And Mark Gardner got on and told a story about, we named him Wallace after Roy Wallace, and and how Roy Wallace was so instrumental in the industry. And Roy always believed in the EPDs and the numbers, and this bull's got great numbers, and he's become extremely popular in the purebred industry, and I think he will be then. But Britton got a phone call the other day from somebody and say, well, hey, we're going to be out in Sturgis, so we'd like to stop and see that Wallace bull. And Britton says he's not here. Hopefully he's never going to be here, because he's still, I think, he's producing good, but he's still got a backlog of probably 2,000 units. So,
Wow. Well, good.
It's been it's the deal you always think that'd be a great thing. You buy a bull and sell a bunch of semen on him, but it doesn't happen very often.
It's fun when it does.
I guess, yeah, but it's got its own headaches too, because then everybody wants, well, can't you get me some semen? And it's like, I don't know.
Oh, that's great. Well, thanks again, Rich. We really appreciate it.
Thanks for the plug.
Thanks for listening, everybody.
Well, we hope you enjoyed another episode of the Roots and Ruminants podcast. Let us know what you thought of it. You can follow us on Instagram, Facebook, Twitter, all those social media things. And, if you ever have any questions, just give us a call. We've got a toll-free number here at 888-498-7333. Be glad to hear from you. Thank you.